Hello, and welcome to another deep value video. Today we're taking an in-depth look at Novo Nordisk, ticker symbol NVO. We'll dive into the financial metrics, assess the company's growth, and ultimately try to find its fair buy price. Novo Nordisk is a Danish multinational pharmaceutical company headquartered in Bagesved, with production facilities in 9 countries and affiliates or offices in 5 countries. Novo Nordisk manufactures and markets pharmaceutical products and services, specifically diabetes care medication and services. Its main products is the drug semaglutide used to treat diabetes under the brand names Ozempic and Ribelsus, and obesity under the brand name Wegovy. The stock is priced as $110 with a market cap of 486 billion. Now let's have some key valuation metrics. Price to earnings stands at 38.1 and the price to cash flow stands at 29.3. The median PE over the past 10 years was 28.4. Over the past 5 years, the company's revenue has grown by 87.8%, and its bottom line has increased by 112%. In terms of earnings per share, there has been a growth of 124.4%, and notably, the number of common shares outstanding is 4.48 billion, a minus 5.7% change. Now let's assess the company's liquidity and solvency. The debt coverage ratio is an astounding 221, so they have a solid ability to handle their debt obligations. The quick ratio, a measure of the company's short-term liquidity, is minus six point is 0.75. This suggests that they are not really that able to handle short-term. I mean, not that not able, but they could probably improve their short-term liquidity a bit, increasing their current assets, excluding inventory. Actually, the long-term debt-to-equity ratio is 0.46, and the total debt-to-equity ratio is 0.51, both suggesting a manageable debt load. Shifting to the cash flow statement, cash from operations is 16.1 billion, reflecting a growth of 129.7%. Cash from investing activities is minus 6.5 billion, with a plus 276.3% change, while financing activities are at minus 9.3 billion, showing a plus 75.6% change over the same period. CapEx has increased by 105.2%, and free cash flow has grown by 112.6% to 12.1 billion. Moving forward, let's look at the return metrics to see how the company is utilizing its resources. The return on equity is 87.4%, which gives us an idea of the profitability relative to shareholders' equity. The return on investment is 85.7%, and the return on assets is 28%. Additionally, the return on invested capital stands at 33.6%, a crucial metric for understanding the effectiveness of the company's capital allocation. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of 9% for 10 years, and a perpetuity growth rate of 2%, we get a fair value of $51.4. Secondly, using a multiples valuation of 20 times earning, operating cash flow, and 25 times free cash flow, we get a fair value of $66.3. And thirdly, the analyst price target is $154.2. Putting it all together, we get an intrinsic value of $90.6. Using a 15% margin of safety, we get an acceptable buy price of $77.1, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I rate Novo Nordisk as a whole. Now, what I should first of all mention is that I'm not a biopharmaceutical expert, so this company for me is hard to assess, to say the least. But from what I can understand, from what I can see, their whole future is based on their diabetes and obesity drug, especially now with a lot of people in America that are trying to lose weight with a Wegovy, I think it's pronounced. Uh, and it's had a lot of success there in America. That's a great market, but they have competition. I'm not sure if in the future they'll be the main player. And yeah, I think this is mostly a play for people that are specialized in biopharmaceuticals. Their numbers look pretty good, but of course they're overvalued, but they're not insanely overvalued. So in the case that you think this will be a great, they'll be a great future player in the weight loss market, then this could be a potential buy. But as I'm not an expert in biopharmaceuticals and I can only interpret the numbers, I believe this is a hold. Now, as for myself, I'm not sure if I actually would ever invest in this company unless to drop to very low valuations for no particular reason. Maybe I don't know, sub 70 levels to be pretty sure. Uh, I think sub 70 levels would be a great price for me to invest. But if you are uh, knowledgeable in this space, you have, I don't know, a connection, you actually work in this field, then you understand the company and believe that their products are going to be the future, then you could invest. Um, and actually make money. But I don't know, I'm not specialized in this market. It would be stupid of me to give you an assessment of which I have no idea what I'm talking about. So this is a personal due diligence matter for every one of you. If you do your own due diligence, if you understand what they're selling, the drugs, if you understand their competition, if they have a place in the future, then you can make your own assessment. But as I've said, for a huge margin of safety, I would invest probably under $70, and even there, I'm not sure because I don't really invest in biopharmaceuticals. Yeah, I'll leave you to do your own due diligence. Thank you for watching. If you found this video helpful, please like and subscribe for more deep analysis. See you in the next video. Bye.